Okay, guys, welcome back. Good morning from London. Quick recap, quick recap as to what's happened yesterday. We had some movement yesterday. Good stuff. All right, but we're going to recap where we were and what transpired and make sense of it all. So first things first. So we said, we're in this. We had this blue line, which is, kind of an internal range of an internal range. Okay, and then we also had this, internal range here, which was giving us an accumulation model. Now we rallied up. We broke out of our range. Okay. However, as we broke out of our range, we broke structure bearishly. The flip happened right here, going from higher highs and high lows. We had a transition in structure. We had lower low, all right, and lower high. Okay. And we said that's fine. We expect that because that's the retracement leg. That's the pullback, into our zone. Now that pullback could happen at any one of these points, any one of these demand zones, all right, for that continuation up. So we had demand zone number one, demand zone number two, demand zone number three. We put a bit of confluence on each and every one of these demand zones to see which one has the highest probability of working. However, the first one failed, second one failed, and the third one failed. So we're going to quickly play the market structure to see what happens. So boom, we got a flush down. Nice little flush down, okay? So now we're going to take a look and see, you know, were there any trades that we could have entered here? Did the signal for a trade enter? And if it did, it would have been obviously it would have been a false signal. But we're going to analyze it anyways, right? Because we need to be seeing, cool. Why, if you did enter a trade here, if you long this, if you long this, why should you have not long this, basically? All right. So we've got 25-minute zone here, 24-minute zone, and a 2-hour zone. So we're going to take a look at that now. We had a bit of a flurry down, so we've got some more interesting things to talk about as a result. As a result of that. Okay, so here we are utilizing the bar replay tool. All right. Now we did have one thing which was slightly annoying, and that was the fact that we did get a break. We got a break on a lower time frame on a reaction of the top of the old demand range. And what I mean is here we did get a break there, so we're gonna just look at that momentarily and see what happened there. So we got a break. We did get a break. And as we got a break up, shortly after that break, we flipped structure again bearishly. So not a decisive break, but we flipped structure bearishly. Now, I'll be honest with you. Let's take a look at whether this was a break on the 15-minute. Okay, so it's becoming less and less of a break on the 15-minute. I think perhaps the 24-minute or the 30-minute will give us that pure. All right, so as you can see, as I go higher and higher in market in time frames, what we're looking at here is just this zone here. I'll put a box around it so you guys can see what I'm talking about. So as we go higher and higher in time frames, oh, not that. I'm gonna just fill this a different color. Put it yellow. Yeah, okay, over here. So as we can see, as we go higher and higher in time frames, we can see that this break is becoming nullified in the sense that the candle there is less of a close, isn't there? So if we go to the 5-minute, we can see on the 5-minute, great, there was a clear close above. All right. But this is why it's important to just flick through your market structures and be a bit patient to see as to whether you would be looking to enter that trade, right? Because off of this trade, we're not just, you look to get the break and enter on a retracement. By the time the retracement happened, if you flicked to your 30-minute, you might say, oh, actually, do you know what? This isn't that convincing of a break. If we look at Market Cipher, we can see on Market Cipher that money flow is still coming down. We had a divergence up there that's still playing out. Um, if we go on the 45-minute, the 45-minute structure is all the way up there. All right, so on the 30-minute is probably the last time frame you can analyze this. But now if you did say if you read this as a break and said, you know what, this is a break, I'm looking for a retracement as a result. I don't blame you. Now, if you entered along there off of the break, okay, you would have probably got stopped out. Now, if you waited for that retracement for that retracement to get in. Now you won't have got stopped out there because that retracement never really happened. We just got flushed down, didn't we? Okay. So we got a flush down. Let's see. Did we have an entry at any of our zones? Did we have an entry on the 2 hour zone? Does it look like we got an entry on the 2 hour zone? No, I don't see any sort of structure. This is a type A, pullback into zone. No sort of structure here that tells me, all right, time to long this. So what does that mean? That means this is gone. This is void. That idea is gone. All right, next, the 24-minute. Can we see any sort of market structure telling us, this could potentially be an area for trade? I can't see it. Can you? No. So what we've got here is just a flurry of bare trend bars, nice dark long black bars telling you, hey, listen, the bears are in control, so sit back. So I can't see anything, even on a 5 minute. If we go on a 5 minute, I could just a flush down. So that idea is that gone. That is gone. Now, if we were to have ranged there and accumulate and had a nice second entry counter trend model, yeah, great. But we didn't get that. All right, now let's see on a 2 hour zone. Could we have had an entry on this 2 hour zone? So we're going to play this now and we're going to have a look. So as far as our market structure goes, it's um, given us low lows and low highs. So we're just going to draw this out. Let's go from top to bottom. So we've got low, 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 high, low, low. Okay, so that means in order for us to get a break or enter a trade off of that reaction, we need to have this level lost. So we need a close above that level. So let's see, did we get a close above that level? Did we get a close above that level before we print another low? So price is starting to range, which is quite encouraging. It's encouraging that we are starting to range. Why? Because if price was to have come down to this region here, okay, let's use this. If the price was to have come down to this region here, giving us a nice SFP with some bullish divergence, that would have been the most beautiful place for a trade. Okay, however, price did not do that. Instead, what did price do? Price came all the way to the last lower high over here. Okay, and price decided, you know what, I'm simply going to SFP that level. I'm going to wick that level. Okay, which is exactly what it did. Um, and then he had another attempt at getting up. Okay, here we see the second attempt at going up. But I'm almost certain we didn't get a break here because there was no trade. Now, I haven't actually looked at the charts yet. This is literally fresh analysis, but I'm almost certain we did not get a break. And let's take a look. I can't see a break because as soon as that wick takes place, yes, we also haven't got a market structure break, or we have now. Um, but we needed to have seen this level, close above that level before we enter that long. So, could we have entered that trade? No, we could not. Now, if you were looking at these charts closely, you probably could have entered a short trade because we did get a break here. We got a bearish break here. We're closed below this level, so you could have definitely looked to enter on that retracement short and followed that second leg down, and that would have netted a nice trade. But that's not a trade we're prepared for. So I'm just, there's no point really talking about it. That's not a trade we're prepared for. So was there a trade there? Could we have entered a trade there? No, there was no confirmation. We planned it, we got ready for those zones, but we did not get our confirmations. And remember, if we don't get our confirmations, there's no point entering a trade. All right. So that's that zone gone. I'm actually quite shocked. I'm surprised none of those zones reacted. So what looks like we've had is kind of, we've had that flurry down. We've had a little bit of a consolidation slash range, and then we've had another flurry down. All right. So where does that leave us? Well, it leaves us at our next POI. The other POI we were watching out for was the fact that now we have come back to this below of this range. So what seems to have happened here, if you remember, I think it was mid last week, we talked about the target of this PO3. If this is obviously if this being your accumulation, this being your manipulation, this being your expansion. Remember, the target of that is all the way down here. Why? Because we had all these stop losses, all these liquidity levels to get around, and that's exactly what price has done. Now, price has come up, it's broken, it's kind of flipped structure, and then it's flurried all the way down. It has flurried all the way down. Okay, so on a global, on a more zoomed out external approach, that's kind of what price is doing. We've got this range, and we look to be coming to the bottom of that range. Now, there are some interesting things here. All right. Interesting things here. So let's just tidy this up slightly. We get rid of all of this, all right, because we don't need this anymore. Get rid of all these alerts. So still not in a trade yet. I haven't been in a Bitcoin trade in a while. Still not in a trade yet. Okay, and that's fine. Still not in a trade as of now. All right, so where are we now? All right, so let's just zoom out a bit. If we go do some top-down analysis, let's look at what the bulls are saying. Let's look at what the bears are saying, and let's get an idea of where we are. All right. So we've got this massive little range, not a massive little range. What's that called in English? Is that an oxymoron? Um, yeah, someone tell me what that's called. I think it's an oxymoron. Anyways, so we've got this range, all right, but this range looks to be tending downwards, doesn't it? We've got this trend line, tending downwards here, and we've also got a trend line tending downwards here as well. Okay, but these trend lines look to be diverging. They look to be getting bigger with time. All right, so we've got these diverging trend lines, and we've got this is different from what gold is doing. Whereas Bitcoin hasn't taken that high, it's still not come back to take that high at 74K. But gold has. Gold has taken the high. In fact, gold has broken above it. So what we see here is this pattern here, where we've got this diverging trend line all the way down. We've still got our daily level intact, which is at 50K, and either two things price can do. Price can break up from this range, or price can break down from this range. But from this range, you've had tap number one, tap number two, tap number three, tap number four. It looks like price is really trying to come down, isn't it? It's really trying to come down. Okay. It had an attempt, well, as soon as it SFP this level, and collected liquidity from this, daily high low, it had an attempt to go up, accumulated, then gave us a PO3, but now looks, that PO3 looks to be bringing it all the way down. So let's see where we are. Now, as far as my next trades, let's look at what the bulls are thinking, and let's look at what the bears are thinking, right? And I'm planning for a longs and shorts. So let's start off with the bears. All right. So if I'm a bear right now, and I'm looking to smash my prey down, I'm looking to smash this price down, all right, what am I looking out for? Well, first things first, I'm realizing that, hey, we've got this range. I can actually move this up now. Okay, say the target of our PO3 is done. I can move this up. Boom, boom, boom. And I can say, okay, I'm going to treat this as a larger range. Okay, I'm going to treat this as a larger range, and I'm going to extend this over here. I've still got this 45-minute zone, and this is one of the things that could be keeping us from, closing below this range low at 55.7. Okay, we've also wicked into the last 45-minute demand zone, holding price up. Now, this zone was derived from this initial impulse. This initial impulse where we had high volume players get in. We got a nice little inefficiency over here, which is a potential place for reaction. And look what price did. Price literally came into that level, dipped into that zone, all right, and wicked up. So it gave us a little pew pew, all right, it wicked up, and we got a nice reaction off that zone. Was that a tradable reaction? Well, let's take a look. No. In my opinion, this is not tradable. This is not a tradable reaction. Now, if you are gambling with your money and just doing a limit order, yeah, great. You might be up 4x, 5x right now, but that's not how we're trading here. Okay. So what we've got right now is we're now at the bottom of this range, and we are considering that if we are going to break bearishly from this range, these are the only things holding price down. All right. First of all, this range low as well as this zone below us. Okay. Now let me just check something. Let's see. Let's see what the volume profile is. So as far as the volume goes, they've also dipped down from the value area low. All right. So that's an interesting place to watch. If we come back up to try and reclaim it and get a reaction bearishly off there, then we're looking at lower prices. All right. But do not forget, because prices rallied down now, okay, let's see what Mr. Fibonacci is up to. So Mr. Fibonacci, if we take this from this low all the way to this high over here, all right, so we can see that Mr. Fibonacci is telling us that our golden pocket is right around here now, all right? So I'm going to extend this in green to signify Mr. Fibonacci's golden pocket. And Mr. Fibonacci is very helpful because he helps us, decide. It gives us idea of as to where we could get a reaction from. So Mr. Fibonacci is saying this is the level to watch. All right, this green box. Now this green box, the higher end of this green box is also confluent with this zone that we just talked about. Now, if price continues to come all the way down, closes below this box, closes below Fibonacci level, what are we going to be looking out for? Well, very obviously, we're going to be treating this as a bigger range, this being your range. So we're going to change that and make that range. We're going to give it a nice color. Range 1. We're going to put it in pink. No, I don't like pink right now. Let's go orange. Do you like orange? Increase the thickness to 3. It doesn't look good. It doesn't look good. Should we go red? No, that doesn't look good. Purple. All right. I'll stick with purple, but I'll make this. I'm gonna make this level darker. I'm gonna make this dark. Yeah, that's better. All right. So if as price comes down now, we have a bigger range now, don't we? Because we have range low, range high. So we're gonna be looking for a reaction. So as I say, we've got a range low, range high. We're going to be looking for a reaction somewhere here. What's going to be that potential place for a reaction? Well, let's look at do we have any zones left over? Yes, we do. We have some zones. So we've got a 10-minute zone. I'm going to extend that over there. And we've got another 10-minute zone. I'm going to extend that as well. All right, at 52.03. Gonna just extend those as potential reaction points. We also have a larger zone here as well, a larger 1 hour zone, which I'm gonna draw that out just to say, hey, we could easily get a reaction off that zone, and that would not be a bad place to enter a trade. Supply zone, yeah, let's make that a zone. We're gonna label it, give it 1 hour. All right, so these are our zones. I'm going to leave them here for now, okay, because price hasn't really come down there, okay. But I'm just aware that, if we're considering this as a larger range, then hey, we've been trading in the premium of the range for quite some while. So, price could come back to see, what the discount is saying. All right. Um, so that's how it goes as far as, the bear goes. And obviously we could get a reaction off either one of these zones, as well as price could simply be doing this. Price could simply say, okay, I would like to come down, break all of this structure, and then get that second counter entry play, break market structure there, and continue up. All right, so that is definitely a possibility. Okay, in the case that the bears continue to drag its prey down, all right, and in case that price continues to come all the way down, all right. Now, if that does happen, then I'm going to be nervous. I'm going to be nervous. Why? Because I'm going to be looking at this daily level, thinking, "Oh, if we close below this daily level, it's danger. It's danger. Danger zone. All right, danger zone. That's where you've got to look at your spot portfolio and say, is it time to cash out? Is it time to cash out? Because AKA, we are in a recession. Are we about to get a deep dive to the 30Ks? And if you are holding altcoins, that's the time to say, is it time to cash out? Maybe I should cash out. All right, because because this is a very slippery slope. This right here is a very slippery slope. The moment we start closing below this daily level, what's coming next? That weekly level is coming next. And we've got this nice trend, nice curve liquidity, which can easily get run. Similar way, in a very similar way, what we just saw. You see what we just saw in this range? This nice liquidity. See how quickly it got run? That same thing could definitely occur. All right, so what are the bulls saying? Well, the Bulls are saying, I want to get a bounce soon. I want to get a bounce. I want to get a bounce. Bounce me up. Okay. So in that case, if you're a bull, you're looking to say, right, well, we could be getting a reaction off of this zone. And if we are getting a reaction off of this zone, let's plan an internal trade entry. So we're going to look at our structure on the way down, and our structure looks as follows: low, 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 high, low, 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 high, low, low. Okay, I guess we've got a low, low there, a low, high, and a low, low. All right, so this becomes a very interesting area to watch, which is this line here. All right, this is the level we need to watch. However, this is far away. let's say price comes up here. Let's say price does manage to rally up and conjures up the strength and break structure. All right, and then that retracement takes place. Now look where our risk to reward is going to be. Look where our stop loss is going to have to be. If we enter the trade there, massive stop loss, right? Huge stop loss. Now it's not bad a stop loss if we're coming all the way up to the range high. That's fine. That's still a three risk to reward. We'll take that. All right. But in that scenario, what I would want to see to have better risk reward is to get a deeper retracement before I enter that trade. Okay. But what I would prefer to see is if price gave us a counter entry number two, where it comes up slightly, it ranges for a bit, then it starts to come down, and then it trades again lower than this level, giving us a nice SFP with bullish divergence and market cipher, breaks structure bullishly here, and then bang off the races. That would be the trade of the week, in my opinion, if that happened. Okay. Now, I'm not a magician. I do not know what price is going to do, but we can just plan um, and stack all the probabilities in our favor. But if that was to take place, I'm definitely going to be in there. Okay. All right. So right now we just have to be careful because we've had this flurry down. We have had this reaction off of the zone, but price could easily, because we haven't broken the structure yet. Yes, price could easily continue on its way, do what it did earlier. So SFP that lower high and then rally all the way down. Okay. So if you do want, this is a level to watch for a short trade. Okay, if you're interested in that short, definitely a level to watch. If you get a flip in market structure there, perhaps on a 5 minute plus, why not? You can definitely ride that all the way down for 3x reward, okay? So that's kind of what I'm looking out for there. Let's see, there's anything else worth mentioning at the moment. It's clear to see, we're developing another liquidity curve, aren't we? We've got these stop losses now coming over here. Stop loss over here, one. Stop losses over here, two. All right. So again, this is giving price a reason to rally up from this range. This has given us a reason to have this range deviation. Okay, not just that, we've also got this trend line of what kind of this developing trend line here. Okay, so if we are to come up here, I'm going to be watching that trend line to see, okay, cool. Or can the price break above that trend line, retrace, and go further up? All right, and then, but before we do that, what we need to see is we do need to see price come all the way up, reclaim this value area high, perhaps retest this value area high, flip in structure, and then we can look to enter to ride that up. All right, so that's kind of what you need to look out for at the moment. Um, you know, I haven't, I'm not going to give you the exact levels to watch today, but these are the ideas you need to be watching. And I'm sure if you follow this channel for a while, and you know how to sort of you understand what I'm talking about, you'll be able to get the exact levels I'm referring to. All right. So that's it. I'm gonna leave that there today. Okay, I'm gonna leave that there today as far as our setups go. And yes, we're gonna talk about what's transpired, which one has given us the entry tomorrow, and we'll go from there. It's been a bit of a dry week. It's been a bit of a dry week. We've had trades, but not the exact ones we're looking for. But hey, what day is it today? It's Wednesday. It's Wednesday, so we've still got some time. Thursday, Friday, we've got some time. Anyways, I hope you found that useful. Don't forget to hit me up on YouTube, follow the Discord, check out the website if you want some one-to-one lessons, and I will see you tomorrow.